To the webinar for today. We will mainly talk about market movements, and we will review and project some major currencies and commodities. So welcome. And first of all, let me introduce Forex Group. And Forex Group is a leading provider of forex trading technologies and service to private as well as institutional traders. And it was founded by Mr. Bill Wong, and it started operation in November 2010. And it has launched ECN account, which provide direct trade execution in currency exchange without brokers, and can provide live rates. Now, Forex have okay. Yes, hello?
Continue it.
Hello?
Yeah, Ming, we can hear you.
Well, the machine say I have been muted, so should I go ahead or?
Yeah, you go ahead.
Okay, no problem, right? No problem.
Yeah.
Okay, now I go ahead. Okay, now the Formax Group now has 7 subsidiaries, and they are operating across the world in China, Hong Kong, New Zealand, the UK, Vietnam, and of course, in India. Okay, now, ladies and gentlemen, today is we will talk about 2 main asset groups. That is, we are talking about the currency, forex, as well as commodity, just like crude oil and gold. Well, in fact, I forgot to introduce myself. I'm Ming Lam, an analyst, technical analyst with Trading Central. We are headquartered in Paris, and I am working in the company's branch in Hong Kong. Okay, now let's go. Let's see. For major forex pairs, we will look at U.S. dollar, of course, euro, pound sterling, Japanese yen, Swiss franc, Australian dollar, and Canadian dollar. Okay, some major commodities also include crude oil and gold. Well, we are technical and analysts, and we do technical analysis. But at the same time, we will also look at some of the fundamentals factors that are affecting those investment vehicles. Okay. So first of all, I would say that we are now in a very good time to trade forex. Why? Because we can see that the U.S. dollar has started a very good bullish trend. Look at this chart. It is a 5-day chart, meaning that for every chart information, it represents 5 days. For every stick, it represents 5 days. So now we have gathered information, data from 2007. This is US dollar index, which is calculated by a basket of currency, just like euro, the Japanese yen, and the British pound, and some others. But the most important rating in the US dollar index is the euro and the Japanese yen. And you can see that the US dollar index reached some highs in the previous several years. Look at this. In 2008 and 2009, it reached top. It peaked. So what happened? Do you remember what happened then in 2008 and 2009? We have the worldwide financial crisis here. And also in 2010, US dollar peak at this level, 88.5, something like this. And do you remember what happened then? It was the European debt crisis, which I think we still have European debt crisis today. And now, you see, the US dollar index has already exceeded the previous high, and it is now consolidating. And all those other indicators, just like this one, is the 20-day moving average. This one is the 50, not 20-day, it's the 20-week moving average. It's a 50-week moving average. And all pointing a bullish trend for the US dollar. And we, as a technical, doing technical analysis, we can see that the US dollar will still have some upside to go. Okay, now this is a 5-day chart. Okay, let's start with the US dollar index, a 1-day chart, meaning that each stick represents the data for a day. Okay, so we start from from the start of the year 2014. Okay, this is US dollar index, and of course for analysis we add some levels. Look at this. The green lines are resistance, meaning that it will take some effort to cross above, and the red lines are support. It means it will provide support. Okay, and the blue lines is we call it a pivot point. That is, when the price fall through this blue lines, we will change our view from bullish to bearish. Now we are in a bullish view for the US dollar, as we can see. Okay. First of all, we will look at the euro. The euro, not very good indeed. Look at this one. It is a 1-day chart for the euro against the US dollar. As you can see, the euro start is a declining trend from the middle of the year. That is starting from May, June. Before, it was on a rising trend, but it abruptly dropped across the rising trend, and the start is declined. And we have some technical indicator that show the bearishness of the euro. Look at this one. We see the 20-day moving average has crossed below the 50-day one, and at this point, the 20 days still remains below the 50-day ones. Okay, so whenever we see these signals, we will notice that the euro, it will be very difficult for the euro to start a bullish trend against the US dollar. And look at this one. Thread. We call it a thread. It's usually a continuing pattern, meaning that if before the pattern it is falling, and after the pattern we will foresee that it will keep falling after the pattern. Okay, so look at the support. Now, ladies and gentlemen, we are looking at very key support at 1.215 against the US dollar. If the euro drop across this one, it will continue. We can foresee that the euro will keep dropping across the board. Okay. The prior point is at 1.261. So if the euro is above this level, we will change our will to be bullish on the euro. But now, of course, not. You see, for the past 2 days, this chart is just make up for today. And for the past 2 days, the euro just dropped like a stone. What happened? Do you know? It is that the U.S. Federal Reserve signal that the U.S. economy is in good shape, and the central bank, the Federal Reserve, will increase interest rate next year on track. Okay. At the same time, we have the ECB, the European Central Bank. Well, you know what they are doing? They are proposing a QE, just like the U.S. did before. So this is fundamental, and it is from fundamental rules. At the same time, the Europe will conduct QE. The U.S. will increase interest rate next year, and you see there is absolutely no reason that we can be bullish on the euro against the US dollar anytime soon. Okay, and next one we have the pound sterling against the US dollar. It is still under pressure. Look at this one. This is our analysis, technical one. And just like the euro, it start dropping starting from the start of the second half of this year. Before that, the British pound was very happily on the rising trend line, but it dropped. And at the same time, you can see that the 20-day moving average has again, just like in the case that I introduced to you, the 20-day, whenever the 20-day moving average cross below the 50-day moving average, it generates a sell signal. And this sell signal in this case is valid, you can see. And now, the GBP is trading in a very bearish channel. And now we are looking at the next level at 1.542. Okay? On the upside, if the pound sterling is above 1.59, we will change our view to bullish, but not now. Not now. It still have some. We perceive that it still have some way downside to go. So our support, we will see support at 1.542 and 1.51. All right. Next, let's see the have a look at the Japanese yen. Very beautiful. This is our analysis. You see a key support at 113.5. It's still on a very bullish trend. Okay, let's look at this one. This triangle. Well, at this point, well, in the first half of 2014, in the first half, the U.S. Dollar against the yen was just trading within a triangle, and this point it breaks out. As a technical analyst, we like to see this breakout, and also this one. I repeated for several times. This is the 20-day moving average, just crossed above the 50-day one. Lovely, right? And since then it just developed a bullish trend, and at this point, the 20-day moving average, we call it MA, has not crossed below the 50-day one, and the bullish trend remain intact. So now we still look at and on the upside, we target 123.7 at the first target. So now it is in a consolidating mode, and let's see if it can reach this first target. Of course, we are confident that it will. And next, we will look at Swiss franc. That is US dollar against the Swiss franc. Also on a very bullish move. You know what happened yesterday? You know what happened? The Swiss central bank just announced that it will adopt a negative interest rate. That is, the bank will have to pay a fee if they put the funds with the central bank. Okay, it caused the Swiss franc to drop against the US dollar. Okay, so at the moment we are very bullish on the US dollar against the Swiss franc. And once yesterday, this forex pair, just touched the 0.984, our first target. And now, just like a Japanese yen, it is consolidating. Here we are seeing in the technical term, we call it a wedge, a rising wedge. Whenever a price just cross above the upper boundary of this rising wedge, we will see a very bullish up move. Okay, so watch out for this level, 0.984. And at the same time, we have the US dollar against the Canadian dollar. Have a look. All right. So at around July, the US dollar against the Canadian dollar, the pair just broke above a declining trend line. And it generates a very good signal that the pair will start a new bullish move, which it did. It is now trading within a bullish channel, a very bullish channel. Okay, we set our first target at 1.1675, which it did touch for the past 2 days. And just like the Japanese yen and just like the Swiss franc, it is in a consolidating mode after touching this first target. And we are very confident that the bullish move has not ended, and it still have some upside to go. Okay, have a look. US dollar against the Canadian dollar. And the other one that also, well, you know that Canadian dollar, we call it a commodity currency because it is in some way related to oil and gas and those natural resources. And well, on a fundamental view, the reason weakness of the Canadian dollar is also related to the weakness of the oil price, which we will discuss later. And look at this one. This is the Australian dollar. Weak. And Australian dollar, just like a Canadian dollar and also the New Zealand dollar, also belongs to the commodity currency. You see, in Australia, it produces a lot of iron ore, copper, and some minerals like this. Okay, so unluckily, it is on a downtrend, starting from a very steep downtrend, starting from September. It seems that it still has some way to go down to the south side. Look at this one. This is our technical analysis. In fact, we advised our client to sell the Australian dollar at this point, sometime between September and October, when it broke below a rising trend line. Okay, this is the first. This is the first selling signal, and we also advise this to our client, and it keeps falling for half a month, and you can see this price pattern I mentioned before. This is a flat, and it is a continuation pattern. So before this pattern, the price was falling, and after this pattern, the price will keep falling. So it did fall after the pattern, and it made a little bit rebound to this point, and it did not cross it. It did not cross the pattern. Okay, and it fell back, and it fell back in this way. So this is the second signal that we gave our clients then, that it is another good time to sell the Australian dollar. And let's look at the second part of the chart. This is we call the relative strength index. Okay, below 50, we say it is weak. Okay, and at 50 it is a neutrality area, and there is it will trend in a range, something like this. But below 50, it is bearish. Okay, so you can see for quite a long time, the relative strength indicator, the index, is on a down move, on a downtrend, and is captured by a declining trend line. Okay, and what we are looking at, what is our target? We target at 0.809, this area, and in fact, for the RSI, relative strength indicator index, if it is below 30, we say it is oversold. Now it is in the oversold region, and we expect that the Australian dollar may make a rebound, maybe a rather weak rebound, and then but the trend for it is it will keep falling. Okay. Now, as I mentioned, for other pairs, you can see that the 20-day moving average this one, this red line. Oh, sorry, hit the wrong button. And this red line remains beneath the blue lines, which show bearishness for the pair, and we have been keeping a bearish view on this pair. Okay, and you see sometimes the technical signals are quite useful. All right. So next one, we go to some commodities. Gold, we say that it is. We don't think it has much upside. We say it has a limited upside at the moment. The situation is quite. I can say it is quite mixed. Look at this, our analysis. In fact, gold has been in a long-term, maybe I can say a medium-term downtrend. It has been captured by this. Have you seen this? Can you see this dotted line? Okay, it has been captured in this downtrending dotted line for several months, and at the meantime, we say we are still we still a bit bullish on this asset. You see, because this has formed a bottoming formation pattern, which usually is showed a reverse trend. This is on a downtrend, and when at the end of the bottoming formation, usually it will show a reverse trend. That is, we expect that it will rise. You see, this is a signal that it will rise. However, for the past few days, it kept consolidating. Okay, it kept in a consolidated mode. So sometimes, well, you know, technical analysis does not work 100% all the time. All right. So what I would say now is you have to look at this level, 1,180. It is still struggling to be above this key level. So once it dropped below this level, we will change our view to bearish. But at the meantime, it is still sitting on this level, and you can see that the 20-day moving average is attempting to cross above the 50-day one. See this one? This red line is trying to cross above the blue one. So have a look. Just keep monitoring the situation, because it is quite tricky at the moment. Okay? Okay, let's move to the next one. Oil. Well, maybe you know it better than I do, that the crude oil price have been falling for 5 or 6 months already. Just like well, it is interesting to know that the US dollar have been strong for half a year. At the same time, the oil price have been dropping for, well, at the same time, it has been dropping for 6 months also, the oil price again. Okay, let's see. Now, as I mentioned before, this rising trend line for crude oil was broken somewhere in July. Okay, and they tried to rise above it, but it failed. It failed, and then it kept dropping and dropping. And at the same time, and I have repeated for many times, that the 20-day moving moving average, 20-day MA, cross below the 50-day one, a selling signal. Okay? And you can see the RSI have been kept by a declining trend line. And also, you see the 30 level, we call this the oversold region. So in fact, oil seems to be oversold at the moment at 54 per barrel, 54 US dollar per barrel. Okay, and it is interesting to know that although this is the oversold region, and it could keep in this region for some time, and it doesn't mean that after oversold it will be bound and reverse, something like that. Not quite the case all the time. Okay. So look at this. Our key level will be 48. Okay. Hope that if we fall below 48, another bullish bearish trend that is to the downside will start. So let's see, and you can see this the oil price also affect the commodity currency, as I mentioned before. Particularly the Canadian dollar has been weak, along with the crude oil price. Okay, and yeah, and this is the main theme I want to talk about today. And any questions? And which pair, which forex pair or commodity pairs you want to have a look again?
52.
Yes, hello? Hello? Yes? Any question? I have a question. Yes? Somehow? Any question?
Yeah, hi Ming.
Yes. Can I go on speaking?
Yeah, definitely. I was just wanted to say one thing. If anyone have any kind of question, they can write down their question in the chat box, which is available down there. And
Oh, I see.
yeah, and
Okay. Can I keep on talking?
yeah, definitely.
So I think the audience will have a question about how we technical analysts set the level, green level, blue level, and support red level, and maybe they think it is the lucky numbers we got when we wake up every day, and in fact we set this level according to several rules. Okay, listen. For example, I take this Australian dollar against US dollar pair as an example. Okay, look at this. This 0.92 level. It is now a resistance level. That is before, let's say in May and June, it is a support to the price. But if the price just cross below this support level will be a resistance level, for further price movement. Okay, and sometimes, let me check. Oh my goodness. Sorry. I'm too excited. And I want you to look at this one. This one, the US dollar index. Okay, and so I mentioned that rule number one, if it was support level before, if it breached the level to the downside, it will be resistance level. Same, sometimes like this one, the US dollar index was on the uptrend, and then in in October, November, it just make a consolidation. We sometimes make a retracement. That is, we will calculate this up move, and then project that it will retrace. That is reverse and going down to a certain level. Usually we use a 30%. We say a 30% of this move or 60% of this move as a support level, and then we got a support level here, and yeah, and indeed the US dollar index found a support at this level. Okay, and sometimes we retrace. We will project. We will project to make our target. We use something called Fibonacci number to make the projection, and it is quite a little bit complicated, and it is not convenient for me to talk in details here. Okay, so first of all, I just want to say that these levels are not lucky numbers. We point out randomly. They are all made according to certain rules in the technical analysis. Okay. Sunham, any question?
Yeah, me.
Yes.
There is a question regarding gold, I think. Mr. Rajesh Dave is expecting some view on gold.
Oh, yeah.
What are the key levels?
Okay, let's go to gold. Yes? Yes?
Yeah, for gold.
Yes, go ahead. Yes, Sunham, can you repeat?
1 second. Yeah, Mr. Rajesh.
Hello.
Hello, yes?
Yes, sir. Any idea regarding silver?
Any idea about
Silver?
silver?
Silver, yeah.
Oh, silver. Okay. I have not prepared silver for today's chart, but I can check for you. One moment, please. One moment, please. So you see my bike? And let me check. And silver. Yeah. Silver. Can you see it?
Yes.
Can you see it? Now, silver. We see a key technical support at 15 US dollar. 15. Okay. And just like gold, it is quite a mix at the moment. You see the US dollar strength, the recent strength of the US dollar, and a slide of the commodity price are creating a mixed picture for gold and silver alike. But you can see that the 20. Can you see the chart now?
Yes, sir.
The 20-day moving average is just like in the case of gold, is trying to get above the 50-day moving average. Okay, we still are bullish on silver, but we think there is chance to show a rebound, and but just mind the key level at $15, and we think that below $15 things will turn very ugly for silver. All right.
Right, sir.
Okay. If there is
Okay.
no, yeah. Any other questions? Okay, if there is no any question, I think we can finish it out here.
Okay, thank you very much, ladies and gentlemen, and I wish you a very happy new year.
Thank you, Ming.
Thank you.
And this is our contact address. You can write us at 622 unit number C6 floor 215 Atrium, Chakala, Nerikula Road, Mumbai. And if you have any query, you can write a mail as well, info@formaxmarket.com. You can contact us at our telephone number, that is 91022264642346. So thank you so much everyone. Goodbye. Take care.
Goodbye. Thank you. Take care.